After many, many months, the apartment sector in Calgary is finally starting to see a slowdown. This apartment sector has been on absolute fire for the last 2 years. It was a little bit slower to get off the ground when the market started picking up, especially in the single family home, and it never really slowed down. Now we're starting to see a slowdown. Look at the last couple of months here, right? We saw a price kind of slow down. It increased, but barely, and now we're seeing a flat line. Is this it for the apartment sector in Calgary, or is this just another bump in the road and we're going to see some price increasing going into the future? Let's check it out. Now, the Bank of Canada has officially reduced their interest rate by 0.25%. Now, this is through ChatGPT, so please take this with a grain of salt. This does not replace a conversation or questions with your own personal mortgage professional. Condo prices in Calgary are $346,000. So with this reduction of 0.25, people who have 5% down can expect a rough reduction of around $46 per month, right? For those of you looking in this price point, condo fees are definitely going to be put into factor, but you can expect an average, maybe a little bit around that $9,000 increase in your purchasing power. So if you were pre-approved for $345, you might be approved for $355, right? This is, again, not going to replace a conversation with a mortgage professional. This is just a very high level understanding of how these interest rates can affect the market, right? For 10%, you can maybe expect a $43 a month decrease, 20%, 3.9, 39. So why am I bringing this up? I was under the impression that the Bank of Canada was considering a 0.5% reduction. And if that were to be the case, that would have absolutely triggered a little bit of a frenzy in Calgary, in my personal opinion. So they only did 0.25, which was modest and respectable. If they did that 0.5% interest rate decrease, you could have expected a $92 reduction in your monthly mortgage fee and an $18,000 increase in your purchasing power. So if that were to happen, people who are approved for $346 could now be potentially approved for $365, which would increase the prices in Calgary, most likely. So again, this doesn't replace a conversation with a mortgage professional, but it does give you a high level understanding of how these interest rates can actually impact a market pretty aggressively. We were at historically low levels for a very long time in Canada, and that really did push up Toronto, Vancouver prices. When the interest rates did increase in Calgary, it didn't really slow down the market because we were so undervalued compared to those two major centers that people were moving here in droves and coming and buying up our real estate. So let's go ahead and read what the Calgary Real Estate Board has written about the apartment market in Calgary. If you want to read this on your own, skip, go to the next chapter, not offended. New listings in August reached 1,000 units, a record high for the month. The gains in new listings were met with a pullback in sales, causing the sales to new listing ratio to drop to 60% and inventories rose to 1,476. Unlike other property types, overall condominium inventory levels were relatively consistent with long-term trends for the month. Rising inventories and easing sales caused the months of supply to increase to nearly 2.5 months, not as high as levels seen before in the pandemic, but an improvement over the extremely tight conditions seen over the past 18 months. So we are noticing a slowdown in apartments, and we're basically on long-term trends right now. Are we going to excel and we're going to see a lot of increases in the inventory, or are we just kind of hitting that bump as people were waiting to see if they were going to get a major increase for their buying power if the interest rates fell by 0.5? So let's continue on. Let's go down here. Sorry, welcome to my hotel in Nashville. I am at a real estate conference, very excited for that. So follow my Instagram channel if you want to see some stories that I'm about to post this weekend. So this is the sales versus inventory. You can see that the actual price point has again softened, right? We're still at a very high price that we've never really seen before here in Calgary for the benchmark attributes. Look at the inventory. Look at how much inventory we're now seeing. 1,400 units at the end of the month. Still not that much inventory. When you look at how large Calgary is, when you look how much activity Calgary has, we're still relatively low in the inventory levels, but the sales have decreased quite a bit. Now, if we look at last year, we've actually are around, again, those long-term trends. Last year we were at 600, just over 600. This year we're at 600, right? You see last year we dropped right down to about 400 sales in December, which is very common, and I'm imagining we're probably going to see the same thing. The difference in last year is that we actually saw an increase in price basically going right through the holiday season, right? I don't think we're going to see that this year. I could be wrong. I would imagine we're going to see it somewhat flatline, maybe small decreases, but I just don't really see the decreases quite yet. But let's continue on. This is the same information as the above chart, just in a numerical value. Everything is the same. The one thing I like about this chart, it just shows the days on market, right? It shows the days on market. It also shows the median and the average price point. So the days on market now is 32 days, right? It's basically in alignment with what was happening in December, what was happening in January. So we are noticing a very rapid slowdown, right? We were at 22 days in May, and it's gone up 10 days in 4 months, 4 or 5 months. So that's a pretty quick slowdown of what has happened in this market. So if this slowdown continues and we go up to 35, 40 days on market, which we actually saw in January of last year, or 44 days, I could see the price point actually starting to decrease a little bit more, depending on a lot of different factors, but at the same time, the interest rate decrease is going to most likely help with an uptick in activity. So let's look at this. Long-term trends, right? Sales. Look at the sales, year-to-date sales. We are at record highs. 2014 was a very hot year for condos, and we were at almost over 3,000 sales. This year, if I move this out of the way, we're almost at 6,000 sales, right? So year-to-date, we are at quite a bit of sales compared to what we've seen. So the activity is still fairly strong, even though we notice a slowdown. New listings, same thing. Look at this difference, right? We are still year-to-date newest listings. We've never seen this many new listings come to the market before. Obviously, there's going to be new projects being brought up, and when new projects happen, you know, you add 100 to 200 units per project, depending on how big it is. But you can see that the new listings have increased quite rapidly year-to-date. So when you look at the year-to-date stuff and you look at all the past, yes, we're still at record high activity in this market. Yes, we're starting to see a slowdown. We're starting to see a bigger gap between sales and sales and inventory, but that's quite common, right? We see that more or less in Calgary when we start to get into the season. The bigger question is what's going to happen with price point. And I think that with the affordability issues that we've got going on here in Calgary, I would imagine condos are going to be pretty heavily targeted, continued. So let's look at this here. This is just a very quick overview of the year-to-date stats again for the sales volume. So unfortunately, just the way that the screenshots work, you can see right here, year to date, and then the percentage change, and you go over here, this is the actual content itself, just the way that I take the screenshots, kind of annoying. But anyways, total sales, you can see, again, we're right on par with what we were last year. Look at the increase in price though, right? Look at the sales volume. We've increased by 18% compared to last year. That is a very large difference in the actual sales volume compared to what it was last year. New listings, we've seen a healthy increase, which is a great see. Year-to-date average of inventory, we're actually at the averaging of around the same. It's a 5% increase, but it's not that much. You can see the months of supply is relatively the same. Sales to new listing ratios have dropped. The sales to price has dropped. So you can see that there's some differences that are happening compared to last year, but I would imagine we're going to see pricing continue to increase. So this is a really good chart just because it helps understand what is going on in each individual quadrant. This is months of supply. This is how fast the market's actually moving in individual quadrants. You can see that apartments in East Calgary are very, very hot. They are still at 1 month of supply, meaning that things that are listed in East Calgary are moving relatively fast, but we need to look at how much activity is actually there because East Calgary really doesn't have as many apartments as other areas. If you look at Northeast Calgary, you can see it's actually in a balanced condition. We shouldn't see a lot of price movement in Northeast Calgary because it's a very healthy, balanced market. We'll touch on that in a second in microeconomics. You can see that city center, southeast, and north all are relatively balanced, right? You're starting to inch towards more of a balanced market, but look at south and west, right? They're still in that seller's territory, the seller's market territory. Things are moving a little bit quicker there. Pricing is most likely going to increase a little bit faster there. So let's keep that in mind. Very, very important to know when you're getting into the market as a buyer, seller, or an investor. Now, benchmark price. Benchmark price, super, super important. We want to know what things are actually available and how much they are in each individual quadrant. You can see that East Calgary is going to be the least expensive, but if you actually look at northeast, northwest, and south, these are all relatively the same. But there's a link in the description that's called benchmark attributes, and it'll be taken to this page here. If we go to apartments, right, and we're considering northeast, northwest, and south, you want to make sure that you're looking at these attributes here. See, built in 2022, built in 2023, and if you look down, built in 2005. So 2023, I said 2023, it's 2013 and 2005. So there's very large differences in the term in the actual building age itself, but there's also differences for square footage, like 908 866 as well as 892. So when you're looking at these benchmark attributes, please do yourself a favor and actually look at the attributes that are in place and then overlap them into the price point. Because when you start to change the attributes and you bring them all up to level, it's going to change this price point very dramatically. So this is really great to know, but let's put over the attributes, and I just don't have time to go through that completely. Now, the year-over-year price growth. Apartments are still at the highest sector of growth compared to all other sectors in Calgary, right? You can see that Northeast is still above 20% year over year. East is still above 20% year over year. So we are still at that higher end price than what we were last year. Like if we even just go back here and we look at this chart, you see like 346 for an apartment, but look at last year, like 263 in January, 299 in August, right? We're still seeing a large increase of price compared to last year. Yes, of course, we're slowing down, which is a welcoming sign. For me, at least, I want more of a balanced market. I think balanced markets are good for the economy. It is great to see things slowing down, but look at just how big of an increase we are seeing from last year. So just wanted to point that out. Now, for those of you who are interested about this increase, thank you so much for everyone who's actually utilized this. This is so great. This is actually very convenient for those of you who have condos and are in apartments. If you just look up like 1234 Street in Calgary, just a random address, you have to click the drop down menu here, which takes a second, right? You click that, you go get my home value, you put in some information. It'll be myself or someone from my team calls and happily explain some things to you. If you're not looking at selling your house, don't stress it. That's totally fine. If you're just looking at figuring out what your home is worth, that's okay, right? We're here to help. We're not here to push. It is a very, very convenient program. So let's actually dive into this one here a little bit. So this is the microeconomic breakdown. This is a really good overview of each individual quadrant. We're starting to get into the nitty gritty of stuff. So we talked about East Calgary and how low of a months of supply it had, right? It had over 100% sales to new listing ratio, but look at how small the actual sales are. Like if you look at City Center, 262 sales, 427 new listings, and you look at East, like they're very, very, very tiny. So yes, these numbers get skewed very fast, and it is still a very fast moving market. I mean, 18 sales over 60 new listings, like there's still things moving relatively quick, right? You look at the price points, 263 compared to 354. Again, you want to look at those attributes to make sure that you make sense of that. But either way, that's that. You can see on average, the sales to new listing ratio has decreased to 60%, which is pretty crazy. Like Northeast saw 46%, which is pretty low, 39 sales and 84 new listings. So if you're looking at buying a property in Northeast Calgary, you might actually be able to get a deal, right? You might actually be able to negotiate a little bit stronger and get a deal and actually, produce something of value for you. If you're listing a property in Northeast Calgary, this is a very important number to know. You want to make sure that you're not just going to be another number, not one of the 55% of people who don't sell within the first 30 days, right? You want to make sure that you're actually going to go on the market and be smart about it. It's got 3.3 months of supply. So again, very balanced condition. You can see that the movement actually fell, right? Because it went from such an aggressive seller's market now to a balanced market. So you can see that we actually decreased by about $29, but the month prior, we actually increased by $4,700. So you got to put these into perspective, right? So this information is really important to know for those of you who are looking at actually getting into the market. And my window seems to be getting choppy here a little bit, so I'm just going to continue on here. This is a really good chart. I'm really sorry, I don't know why this is so choppy, but this is a really good chart because it showcases the percentage of the year-over-year gains. You can see that we actually peaked at almost 20% in December of last year, 20% year-over-year gain. Now we're starting to reduce down. The market is starting to soften, we're starting to slow down, but we're still at average around 15-ish% year over year. I would imagine we're going to start to see that slow down as we're still seeing large year-over-year increases, but they're not as aggressive as what they were. Now, this last one here is really good. It's really convenient. You can see in 2021, we kind of flatlined, right? 2019, we dropped. 2020, we kind of dropped. We kind of flat. 2021, flat. 2022, it kind of took off, and then the interest rates slowed everything down. 2023 took off. 2024 took off. I would imagine 2025, we're most likely going to still see some increases in the market. So if you have any questions, go ahead, book a Zoom call. Book a Zoom call here. Go ahead, put your home in this evaluation tool and ask me questions. Go ahead and comment below. Let me know what your thoughts are. I'm more than happy to help. Thank you very much for everyone who's watched this entire video. We'll see you on the next one. Peace.